How's it going, everyone? I have a great reaction video coming up. We have Harry Dent, okay? We have this gentleman reacting to Harry Dent, which I'm going to be reacting to. And Harry Dent is a forecaster who predicted a 2009 market crash. He predicts a up to 87% market crash this time that will go on for decades. 50 freaking years of crisis, of recession, of depression. Let's get into it right now.
Harry Dent, an American financial newsletter writer. His 2009 book, The Great Depression Ahead, appeared on the New York Times bestseller list. He's the man that predicted the 2008 financial crisis.
He did.
And also the debt bubble popping in Japan.
He did.
But over the past 2 years, he's become more and more vocal to say we're heading into a financial crisis, an economic depression, and an epic stock market crash of anywhere between 85 and 90%.
Damn.
But in today's video, we're going to go over his latest predictions during his past 2 interviews with Stansberry Research and also Kitco News. I'll give you my reaction and analysis to it to see how likely it is to come and if it will come when he says it's going to come.
So this 80%, 90%, it sounds bizarre. It sounds just so whacked, unbelievable, but it has happened before a few times. The last time was in 2000 with the dot-com bubble, which I experienced. So these numbers are real if the market is crazy overvalued, which many people believe it is right now.
By March. So everyone, let's not waste any time. Let's get straight into it.
People have to realize since 2007, and I called that one 20 years before it happened. Later.
He called it 20 years before it happened. He's like Nostradamus. How about 2,000 years before it happened? That's kind of ridiculous. Anybody who could predict something 20 years from now, something's gonna happen within that 20 years to make that prediction come true, most likely. So 20 years.
2007.
I think it's funny how he said he called the 2008 financial crisis 20 years prior. I think if you make prediction of a crash for 20 years, like they say, you'll most likely probably be right.
We had a peak in the stock market in late 2007, and we went into the first deep recession since the early 80s and the early 30s, okay, the Great Depression. And that's when the Federal Reserve and central bank just went nuts. We have printed more money in the last year and a half or so than all of the printing before this, and even, since 2008 and 9. I mean, just years and years of this. So they keep doing exponentially more. So they're just desperately keeping this bubble going.
And I agree with him there. They are printing more and more money each time we have a financial crisis. In the 2020 crash, they increased the money supply by 27%. That's right. All US dollars that were printed in existence, 27% of it was increased in just 2020 alone.
They have to do that because they're protecting against the crash, okay? They need that much money because they are afraid that if they don't do that, then it's going to definitely crash. And the Fed has been doing it over and over again, but each time they need to pump up the economy more and more just to keep it from crashing.
So what this means is during the next financial crisis, they're going to have to print so much money. That could be when the US loses world reserve currency status, and that would be a big risk. And that could be the big one that leads us to this huge crash like he's warning about. Because
so the world reserve currency, a lot of people talk about the demise of the dollar. I've been one to go against the grain, and if you see the past several months, the dollar has actually gone stronger. It's going to take a lot. It's going to take a lot for the world to switch to another currency or another basket of currency. And just think about for yourself. Who's going to trust the freaking RMB? Who's going to trust the euro? Even the euro, the Aussie, the Australian dollar, nothing could compete against the US dollar right now. So, I mean, it's definitely possible, and most likely it will come sometime down in the future. But right now, I don't see it happening anytime soon.
Said every financial crisis they have to print 10 times the amount they did the previous crisis.
After that, I'm going to be shocked if we do not see a downturn. So it's at the point where, to me, this is such an extreme bubble. If you're hanging in there to say, well, maybe it goes another 3 or 4 or 5 months, I'm like, get out. What my research does show 100% is that when a bubble like this bursts, you're going to see 40 to 50% crash in the first 2.5 months.
So 40% in the first two, that's typical for a big crash. But the point that he said before, if you already made a bunch of gains, the market's been on fire, okay? So you already made a bunch of gains. You already made 50, 40, 90, 100% money returns, okay? And now you're still in it with all these freaking headwinds, all these red flags, but you're still in the market because what? You want to eke out another 5 or 10%. It doesn't. The upside should not trump the downside risk, because the downside risk is becoming more and more apparent. I've been saying that for months now, and we are seeing it come out to play. So, yep.
And if you sit and wait for that, it'll happen before you're ready, and then you'll panic when that happens, and then it'll bounce, and then you'll look like a double idiot. So this is very tricky. And I think Baron Rothschild, the richest man of the 1800s in Europe, said, "What is the secret to my success? I always got out a bit early."
So I'm not sure if we
Get out a bit early. Yeah, that's pretty funny. So yeah, it's for me, for someone who's older, being more conservative, I want to protect against downside risk. And many people, especially probably a lot of people you watching from my demographics, are, younger, so you have a more risk tolerance. But everybody wants to make sure that you actually have enough funds in your account to take advantage of these downturns. If you're riding the downturn all the way down, then you don't have any funds to buy. So whenever you see something major like this happening, you should be at least selling some of your assets to be ready to take advantage for a possible greater downturn, which looks like it's more and more likely.
we're going to see a 45 to 55% market crash early this year. But what we did see during the market crash of 2020 is we did see a 40% drop very, very fast. And we also saw in 2018, when the Federal Reserve started lifting interest rates, we saw a 20% market crash very fast, the fastest on record. So when the crashes do come, they're getting faster and faster.
It will not take much to prick this bubble. That's what I'm saying. Now, when a major bubble of this magnitude, like 1929 or 2000 or now 2021, crashes, the whole crash tends to be about 80 to 90%. 1929 was down 89%, 78, in 2002 crash, the NASDAQ was down 78%.
I was there.
I'm saying stocks in general in this crash will be closer to the 29 to 32 crash. I'm estimating 87% for the S&P 500 and maybe slightly higher for the NASDAQ. So this is not something to sit through and just rebalance, as financial advisors say.
Yeah.
Well, everyone, that is a big, bold prediction.
What would you do? What would you do? What is your plan if it continues to drop? If it drops another 5%, 10%, what are you going to do? If it drops 40%, what are you going to do? If it drops 80%. So right now, we're so over leveraged. By the time, if it goes down probably another 5, 10%, you should see a lot more selling, because so many people over leverage, so many people have options, and when they're going to be out of those, they're going to have freaking margin calls, and they're going to be forced to sell assets. And that's what's happening to crypto as well. People, when the market turns down like this, people have to sell whatever they have to cover their ass. And right now there's going to be a accelerated selling if it continues to go down like this.
Is predicting that we're going to face a stock market crash like in the Great Depression, where it fell 87%. And I bring up a chart here. We can see in 1929, the S&P 500 hit 500, and it did not recover for another 29 years till
29 years, okay? 29 years before it took time before it recovered.
1958. So when they say, the stock market always goes up, yes, that's been right in modern history, but when we go back to the Great Depression, it wasn't the case. It took 30 years, and then it fell down again to the same level in 1985. So that is nearly 60 years where the stock market did nothing. Now, again, I'm not
60 freaking years, and this is real data, and probably, if I'm not sure if this is inflation based, but if it is inflation based, we're talking about 60 years of negative negative returns. Okay, that's something that it seems like it's unbelievable, but it's possible, especially right now. Even if you see the numbers go up, if if there's inflation, if there's a lot of devaluation of the dollar, then even though the numbers go up, you're actually losing money. So this is a possibility. It's more and more likely to happen than not. We haven't seen it for a while, but over a long period of time, everything reverts to the mean. And right now, when you see this massive bubble, when it crashes, it could send stocks down for multi-years. I'm not sure 60 years, but 5-10 years easy. I'm not sure if you know, side note, Japan, right? Japan had a crash in the 80s. Was it 90s? Was it 80s? Yeah, 80s. And guess how long it took them, their stock market to return? Okay? Guess. Never. After 40 freaking years. I think either 40 years or it still hasn't returned. So Japan, at that time, the number 2 strongest, most powerful economy in the world, when they had their market crash, it took freaking 40 freaking years, 4 decades, more than probably 90% of you been alive to reach back to their that same level. Imagine you put your money in there in the stock market and you hold it all the way down, and it takes 40 freaking years to come back to this point. That's a freaking nightmare, right? It happened.
I'm not saying this is going to happen. I'm not predicting this. I don't think it'll be that bad, but this is a possibility and something we have to learn from history.
You have to get out of the way of this, and then we will have the buy opportunity in investments of a lifetime in around late 2023.
Crash will be.
So this is what I'm saying before, and I've been saying, you know that this market is going to turn around sooner or later. Okay, it's inevitable. Now we're seeing it happen, and imagine if you are one of the smart people like me who has a pile of money ready to deploy at these deep discounts, which is going to happen, then you're going to look like a freaking genius, and it's going to really benefit you over the long run. So be patient. You don't always need to be in the market at every single second. So I've been out of the market for months now, right? And I've been patient. I've seen the run up. So what? I know I had a high probability that the market is going to turn like this, and now it has. I'm still patient right now because I still think we're not even close to the bottom.
Triggered by people pulling out of cryptocurrencies? You think that's the string that
I
starts
think
to
the
unravel
smart
everything?
money will start shorting stocks and cryptos, and then all these people that piled in, it's the dumb money, I hate to say it, the everyday person that piles in the last 6 to 12 months, just like in 99. And when the smart money starts selling, it doesn't take much for them because all these people are overcommitted, and then they get scared because they're not sophisticated investors.
So smart money, dumb money, you guys know what that is, right? The billionaires, the hedge fund owners, all those the people on the top, they make money when you lose money. They need these massive volatility to make money, and they need these cycles that are decade-long cycles for them to crash everybody else and for them to buy again super cheap. So they can make money over the long term. And this is a cycle that's going on over and over again. They will get out first, and when they get out first, everyone's going to follow. They'll lose all their money, and they'll start to go back in. It's done over and over again. But the smart money, they have patience, and they wait for all the dumb money to come in. Because yes, it's 100% true. Most of the people who invest in the market, in crypto, they've joined, I believe 80% joined in the past 6 to 12 months. Because they have FOMO, fear of missing out. They see everyone else making money. And that's exactly the time when smart money leaves.
So all it takes is to get the markets to go down, I think, a little over 20%, and people will start panic. But it takes the smart money to trigger. The dumb money's not going to trigger this. The smart money's going to say enough is enough.
So again, what he's saying there is the smart money, the hedge funds, the banks, the institutions, they're going to be the ones that are going to trigger this crash. And what have we seen with insiders recently, everyone? Well, we've seen this. Hedge funds are selling tech shares at their fastest pace in a decade as rates spike. Now,
so when you see this, and I say this over and over, when you see smart money, when you see billionaires, when you see hedge funds selling at a record pace, and you're not, why not? Do they know something that you don't? Of course they do. So when they start selling, you should at least pause and think, shit, they're selling. maybe I should take some of my profits, some money off the table, right? It's freaking basic common sense. But guess what? No one does. No, basically all the retail investors, they don't do. They hold, because what they do is this: they see they made so much money, and they say they made it was like a few months ago where they made the maximum like $10,000. They lose like 20%. They're down to $8,000. They keep on thinking, I need to get back to that 10. As long as I get back to that 10, I'll be good. As long as I get back to that 10. They keep on focusing on their absolute maximum that they made, and they feel like they're losing money because of that, because it came down from their maximum, and they don't think about, oh shoot, I actually made money because I bought at 5,000 and went up to 10, and now it's at 8, and they keep on thinking they lost 2 but actually made 3. Man, with all these numbers, I'm getting confused. Anyways, guys, this is part 1. I need to run. Hope you guys like this. You want more? You want part 2? Put it down in the freaking comments, y'all. I love you guys. Talk to you soon. Stay safe. Be safe. Love you. Bye.